Hello and welcome back to the Prody Academy YouTube channel. I'm Michelle, and in today's video we're going to be discussing how to understand your balance sheet. Now, a balance sheet is a financial statement that provides an overview of the company's assets, liabilities, and equity at a specific point in time. And it's important to understand to know what each of these means in order to be able to understand how well you're doing. Now, it can be difficult to make sense of all of the information contained on this document, but there are ways to break it down into more manageable pieces. So with that said, let's jump straight in. So the first question to unpack is, what is a balance sheet? Now, as mentioned already, the balance sheet is a financial statement that provides information about the company's assets, liabilities, and equity. So if we start at the first section, being the asset section, this lists out the company's assets. So assets are anything that can be turned into cash, and examples of assets accounts would be cash, accounts receivable being amounts owed to you by customers, inventory being amounts that, or rather goods that are waiting to be sold, and amounts such as prepayments. And an example of a prepayment would be annual insurance that is paid in advance. Now, breaking it down a little further, assets are also usually broken up into short-term, being less than a year, as well as long-term, being a year or longer. This then brings us to the second section on our balance sheet, being our liabilities. Now, liabilities are for anything that you owe money for. An example of a liability would be loans payable or amounts due for goods that have been purchased on credit. And like our assets, liabilities are also usually broken up into short-term as well as long-term. This then brings us to our final piece of the balance sheet, which is our equity section. And the equity section is calculated as being or by subtracting what you owe from what you own. And this will give us the business's net worth or the business's net value. So why is the balance sheet important? Well, the balance sheet provides you with a snapshot of what the company's assets, liabilities, and equities are at any given point in time. And a balance sheet is a tool that can be used to find out if the company has enough finances or has enough money to cover its obligations and stay afloat, or does it have enough assets in order to cover its long-term obligations. Now, the balance sheet can also be used to determine how a company is financing its operations. So if we see a company that's generating enough net income, we will have higher retained earnings from one year to the next. And on the other side of that, if a company is using debt to finance its operations, we will see an increase in its long-term debt from year on year. So we've looked at we've gone through the explanation of what our assets, liabilities, and equity are. But the next key point to remember is that the balance sheet should always be in balance. And what do we mean when we say it should always be in balance? Well, our assets should always equal our liabilities plus equity. And this gives us what is known as the accounting equation. Understanding this equation will help you understand your company's position. So if the company has more liabilities than it does assets, this will give us a negative equity value, which is a potential major red flag, especially when it comes to more mature businesses. Investors and creditors like to determine a company's financial health using something called ratio analysis. So if we look at an example, determining the company's liquidity, we would be taking our current assets divided by our current liabilities. So applied to an example, if we have a balance sheet that has $67,500 in current assets, as well as $34,200 in current liabilities, to get to that number we're looking for, we would take our current assets divided by our current liabilities, which would give us a number of 1.92. Now, this could be either good or bad depending on the industry we operate in. But in general, anything near or over 2 is considered acceptable. Other performance indicators that you'll come across will include things such as solvency ratios, which are also called financial leverage ratios, coverage ratios, efficiency ratios, and profitability ratios. Corporations also make use of market prospect ratios, which are used to predict performance, which is imperative when it comes to valuing a company's stock price. We then move on to harnessing the information on the balance sheet to help you improve your finances. The balance sheet can also be used in order to assess your company's vulnerability to risk. So a complete balance sheet will include balances for things such as cash on hand, inventory, and accounts receivable. And by analyzing these numbers, you'll be able to determine whether your business is weak or strong in relation to other companies in similar industries. If there are any areas for improvement that have been identified, such as having too much debt, this will allow you enough time to prepare for when the unexpected happens. If you want to take control of your finances and improve them, then the balance sheet is a great place to start. Understanding what it includes and how to read the balance sheet will help you or will provide you with insight into where you can make changes. So whether it be in order to get more money for yourself or to avoid unnecessary expenses that are taking too much of your paycheck. The best way to use this information is by comparing 2 different months side by side on paper so that you have everything at hand. And once you've done this, focus only on adjusting the areas which seem most important, such as lowering debt payments or reducing your inventory on hand, and seeing if this will have an impact on your bottom line. The balance sheet is a powerful financial tool and it can be used to improve your finances. And it's important for you to understand how the information works or what's going on the balance sheet and what the information represents in order to make informed decisions about improving your money management skills. As always, we trust you found this video insightful, and should you have any thoughts, comments, or suggestions for future content that you'd like to see, please feel free to pop it in the comment section below. Please also join us on our social media platforms such as LinkedIn and Facebook, or at our website at proteafinancial.com. Protea Academy, striving to achieve better accounting for everyone.